Hey, good morning, everyone. Marty Missouri here, August 23rd, 2019, Friday. About a half hour, a little less than a half hour before the open. So this is your pre-market update. I just want to look at two screens with you and update you on the trend that we've been following here the last few days. This is this morning. I saw the headline first, then I saw the futures just fall off a cliff, S&P 500. 1 minute chart right here. This was on news that China indeed has prepared its retaliatory tariffs, and this is in retaliation to the latest from the US, the 10% on the remaining Chinese imports, with some exceptions now that were announced later, and with a delay on some. But a chunk go into effect September 1st, and then the rest on December 15th. China retaliated today with tariffs on 75 billion of U.S. goods. I think it's a 5% tariff, and then a resumption of the 25% tariff on U.S. automobiles. So car stocks, U.S. automobile stocks are falling quite precipitously this morning. So you can see the market came down. Getting a little relief in here. Technical indicators were showing it bottoming right in here. We'll see. It's going to be all over the place. The Fed Chairman Powell speaks in Jackson Hole, Wyoming in an hour. He was going to have a tough go of it anyway. There's quite the dissension on the Fed board of voting governors. 3 yesterday said they really don't want to cut rates. I listened to Dallas Fed President Kaplan this morning. He did articulate precisely what we've been saying herein for a very long time. And that is, while the Fed at the margin can provide some support that may leak through to economic activity, I can tell he is concerned about the asset price inflation that you get with Fed cutting. He said that the companies are borrowing on the Treasury curve, not on the Fed funds rate, so it doesn't really help much in terms of lending. And I think we need to be concerned with the extent of lending out there anyway. And he basically just said that Fed policy is not the fulcrum. The issue is trade policy, immigration policy, and so on. He said those are the things that really need to be worked on. We need to get back to thoughts on infrastructure and that sort of thing. But over and over and over again, and the Fed is no longer shy like they were, 6 months ago to mention trade. They are mentioning it because it is the problem. We recognized that quite some time ago. I am very curious or very much bothered by a lot of the other commentary I hear from analysts when I have Bloomberg TV playing in the background. And they're doing the analysis, this is, 0.05% of GDP. It's no big deal, these China tariffs and so forth. I recall that narrative back when we were talking about subprime debt back before the 2008 crisis. And what people fail to recognize is the emotional effect, the domino effect, the sentiment effect. You can impact a very small percentage of an economy, and that can have a wide range and kind of a domino effect. Again, it hits the neighboring business or the ancillary businesses, and then it just kind of ripples through and become a big deal. Trade is something that we recognized in here, for the last couple of years as being something that is huge, but is not recognized as being huge enough. And that you mess with that, you begin messing with global supply chains, and it has severe global economic consequences. It appears that everybody's getting that message, but now we have an administration that's really boxed itself in a corner. For the president to seem at all credible on the situation with China, then he virtually has to announce that those 10% tariffs are going to 25%, and that is going to rip through the markets regardless of what the Fed says this morning. Now, Powell could turn more dovish. You read in my earlier written blurb that he may be modifying his speech right now because this is a big deal and this could morph into something worse. You get this reflexive action. You get the market coming down. You get the consumer getting worried about that and canceling vacation plans and so forth. And then you have a situation where you can bring on a recession, and the stock market could be the final straw that breaks the camel's back. As I've reiterated here over and over again the last few weeks, we get into recessionary conditions, and then we have huge problems in the corporate debt market, and that's when you get something that smells like 2008 and a real mess for the stock market. So kind of a precarious spot. I mentioned again, just to reiterate, the president's rhetoric would have him virtually forced to retaliate against China's retaliation, if I may say it that way. But I do think the president has gotten the message. You can tell from his own commentary, while it really goes back and forth, you can tell he's troubled and he's getting the message that this is having an economic impact. So he may not show up with a knee-jerk response. If he doesn't, that will calm the markets. But the market's going to be on edge until they hear from the president and what he has to say about China's move this morning. So again, let me just jump to the chart we've been following. Again, this is the 1 minute chart. You can see the market, maybe anticipating that the Fed's going to help out a little bit this morning. It can help out sentimentally. It can help out with stock prices, but I really don't think it can do much on behalf of the economy right here. And if it does help stock prices too much, of course, it creates perhaps more of a problem, because then we're talking, bubbles in the not too distant future. Okay, so here's that chart of the futures again. Now we're coming off of this mini correction. Didn't get the drop and the penetration here that I thought. Come back, and we've tested this multiple times. Has to be close to a dozen times now. I said here a couple of days ago, this could be weakening this resistance line here. And we have, of course, all these shorts up here with buy stops that could ultimately push the market higher. We really tried to get through it again yesterday. You can see it, but again, on these daily charts, folks, all that matters is the close. And you can see we came up, closed below it down here. And then this morning, we were pushing up against it. Every day I keep thinking, well, this is going to be the day that the shorts are going to have to cover and we're going to get a nice rally. I was already skeptical today because I don't know that Powell is prepared to promise the world in terms of rate cuts, which I'll say it again for like the third time this morning. The only thing I think that can help right here is stock prices. But we got the China news. So this is what we're looking at live, a pretty big drop in the S&P. We begin breaking through these levels. You get the Fed to help out on the downside here, and then suddenly we get the opposite. We get stop losses on the bulls get hit. And then ultimately, as I said, and I think it's an inevitability that without resolution to the trade war, and obviously it's going in the wrong direction, we get through these levels and we go to lower levels, and then we have more serious conversations about what that's doing to the economy. But if I go there again, I'd just be repeating myself for about the fourth time in a row, so we won't right now. Of course, there's going to be plenty more coming on the written blog, but today's going to be a very interesting day, very volatile. I don't think Fed Chair was prepared earlier to help the market out this morning. I think he was going to kind of stick with what he said at the last meeting. I think this morning's news from China probably has him modifying his speech. We should hear something along the lines that the U.S. consumer is very strong. As long as the consumer stays very strong, the economy is in good shape. But we have these huge trade risks. If that begins bleeding through to the consumer, then we've got bigger problems. So we're going to have to be on our toes. We are ready to provide stimulus as aggressively as we need to when it's needed. Commentary like that. We'll see if that's enough for the market to find a bottom in here this morning. Thanks, folks. Stay tuned. Have a great day. Bye-bye.